Hi, my name is Ben, and welcome to today's lesson of the day. But before I get into that, I'd like to give a brief introduction about myself. Once again, my name is Ben. I'm an online trader. I've been trading for the past 7 years. For the past 2 to 3 years, I was doing crypto trading. Then after that, I'm now into Forex trading, completely Forex, and now partly crypto and other markets as well. So what I would like to bring to you now is a recap of what we've covered so far in our previous segment. We talked about introduction to online trading. We talked about the various types of markets. We talked about the components of the market, and we also got to talk about the risk factor that is involved and where that risk can be cut off or can be removed by you getting the skill, because online trading is very lucrative, but at the same time it's very risky if you don't know what you're doing, because you end up gambling on the market. So I won't go into detail about that. You just have to refer to our previous lesson that you'll be able to find online on all our social media platforms. And so that is what we covered last time. So today, as part 2 of this segment, I would like to go through the following, that before the end of this lesson today, you'll be able to know when to trade the market, the market types that we have. I'll now get into detail on that, and I'll also be talking about margin trading today. And lastly, we'll look at the 3 types of analysis, because there are normally different types of analysis on how you can look at the market. How do you make a decision on whether to buy or sell? That decision is done by analysis. You do that through analysis. So we have 3 types of analysis that will be able to help to give you enough information for you to make the right choice, whether to buy or sell or stay out of the market or exit the market, with the positions that you've already opened. So right away, let's go into trading. So when do you actually trade? Now, there are different types of markets as we'll look at. First and foremost, there are markets that are open 24/7. There are markets that are open only Monday to Friday. And so you need to know when to trade. That question can only be answered by what type of market are you trading. But before we go into the types of markets so that we know when to really trade, I'd like to illustrate to you that trading, we have 4 segments or 4 sessions of market opening. We have what you call the Sydney session, we have what you call the Tokyo session, we have what you call the London session, and we have what you call the New York session. These are the top 4 stock markets in the world, where with these timings, people are able to know when to trade and what to trade, and so how long will the session last, and so on and so on. So don't forget that we have 4 sessions in trading. Once again, Sydney session, the Tokyo session, the London session, and the New York session. Different sessions have different liquidity and volumes of money that is flowing into the market. So we have different sessions and different mode of market volume and strength as far as online trading is concerned. So let's now look at the types of markets that we have out there. Previously, I mentioned in part that we have the stock market. That is the oldest, financial market that we've had, since time immemorial. The stock market, that is what almost everybody is familiar with. Then we have what you call the Forex market. We have what we call the crypto. I think the newest market that we have today is the crypto market, the cryptocurrencies market, which started way back in 2009, 2010. And so far it has grown to be one of the biggest financial markets, actually the second best and the second biggest financial market after the Forex market. The crypto market is growing very rapidly. Since the time it started a few years back, it's the most recent because it started recently, but it has overtaken all the other markets. Like, it has now overtaken the stock market and other markets already. Like the all-time high of the market capitalization of crypto, it has gone past $2.9 trillion. The Forex market is $7.1 trillion that has been there for over 50 years. The crypto market, just barely over 10 years, is already past half of what the Forex market is. So that tells you how big. You can't ignore the crypto market. So it's high time that people learn how to, you and I know the strengths, the ins and outs of the crypto market, so that you can take advantage of it, because a market that speaks $2.9 trillion as a language in a day, you need to learn that language if you have to be, the financial market has to be in your favor. So that is the crypto market. We have commodities market, we have the metals, we have the oil market. We have crude oil as a market on its own. So different types of market. When we talk of metals, we have gold and silver. These are big markets on their own. So these all put together, they make what we call online trading market, or the financial markets. So we have different types. But what I would like to zero in mostly is on the crypto market, because of its volume, and the forex market because of how big it is, because it's the biggest financial market. So you need to learn the ins and outs of all of these: the stock market, the forex market. Referring back to what we've already mentioned, the stock market and the forex market, they are open 24 hours, 5 days a week, Monday to Friday. For people who live in the US, that is Sunday to Thursday. But for those of us in Africa, mostly, that is Monday to Friday. And so that tells you that the forex market or the stock market does not operate over the weekend. So it is only open Monday to Friday, 24 hours a day, only for weekdays. But the crypto market, on the other hand, is open 24/7. So all around the clock, the forex market is open for people to transact, for people to trade, and that is how big, what is contributing to the growth of the crypto market. So that is the slight difference between the crypto market and the forex market. Number one, the crypto market trades 24/7, the forex market trades 24/5. Number two is that the crypto market, we only trade cryptocurrencies, the digital currencies that we'll get into in detail later on. And if you're not familiar with these concepts and the market and everything, then all you have to do is to become part of a blockchain academic hub, so that you can learn all you need to learn as far as cryptocurrencies are concerned. So we trade cryptos, or cryptocurrencies, or digital currencies, like Bitcoin against the US dollar, Ethereum against the US dollar. As I mentioned before in the previous lesson, that when you talk of trading of the financial markets, you're always trading a currency pair. So you can't say you're trading Bitcoin. You're trading Bitcoin against what? You have to trade Bitcoin against another cryptocurrency, like the USDT or the BUSD, which are stable coins. Or you can also trade crypto versus crypto, like Bitcoin against Ethereum. And we do that on a crypto exchange. Now, just mention the name, but the top crypto exchange that we work with, that is there right now, available for everybody to trade with, is Binance. So it's available 24/7 to trade the crypto market. When it comes to forex, forex is Monday to Friday, as I've already mentioned, 24 hours a day, but then it's traded through what we call an electronics communication network. In short, we call it ECN. Now, this is a system where people put money together. It's like a pool where we put money together and trade the markets. Some are buying, some are selling. Trading is a war between two forces: the buyers versus the sellers. We call them the bulls versus the bears. The bulls are buying, the bears are selling. So it's a force in between the two, and whoever will be, the market will be in favor of them based on current circumstances, based on the technicals of the day, and so on, the sentiment of the day. That is what will inform if somebody will make a profit or not. So the skill, again, is very, very important, because you need to use the skill to be able to reach a conclusion in your analysis, if you have to be correct several times, because trading is all about skill. So forex, that's how we do it on this network. Different, as I've already mentioned in our previous lesson, is that trading, we have different players, and all of these players we pull together into the ECN, the Electronics Communication Network. Now, for us who are retail traders, it means we trade through a forex broker, which we'll learn when the time comes. But as you trade through a forex broker, then now that will give you a platform to trade. Now we have different brokers. Just like in the crypto market, it's traded on a crypto exchange. In forex, we trade as retail traders. We trade not directly to the market, we trade indirectly through a forex broker, which in common language we can call them online banks, that will allow you to buy and sell currencies through them, so that they give you an opportunity to trade the markets as a retail trader. So in forex, we call them forex brokers. In crypto, we call them crypto exchanges. So we have different types of brokers, which again will become a topic on its own when the time comes, where you'll be able to know which is the best, how can you find the best broker for the market to trade forex, as far as forex trading is concerned. So that is the difference between the markets. Different markets have different trading sessions, like the commodities market, the currencies market, the crypto market. They don't trade at the same time. We might be open the same time, but we have different sessions, and different markets have different sessions and also different days. Again, crypto is Monday to Monday, forex and stock market is Monday to Friday. So that is a summary, like a recap of what we've just mentioned as far as market type is concerned. So when you trade the market, the next thing that I'll mention is about margin trading. As retail traders, we can trade through as we trade through a broker, there are advantages that the broker will give you, and one of them is margin. Okay, margin trading. When you talk of margin trading, it means you're trading with borrowed money. That is an advantage that a forex broker will give you as opposed to other markets. The stock market, you might not get that opportunity as far as retail trading is concerned. Crypto market, nowadays they've introduced margin trading, but with very strict terms and conditions. But with forex market, if you know what to do, then margin trading can be of an advantage to you. In trading, as we mentioned last time, that trading is risky. Now, this element of margin trading is where the risk is pronounced, is amplified. But if you know your skill very well, then this margin trading is of an advantage to you. I normally look at margin trading as a double-edged sword, that if you don't know what to do, then this sword will cut you, but if you know what you're doing, then you will use this sword to cut the biggest meat for you to enjoy. So margin trading, I want to illustrate it very well, is that you're trading with borrowed money. First and foremost, you will deposit $100 on a broker account, forex broker account, and then the broker will now give you leverage. We call it leverage. So we have different leverage levels. We have 1 to 100, 1 to 400, 1 to 500, 1 to 1,000. I've seen recently there's 1 to 2,000. What do I mean by 1 to this? It means that when you deposit your money with a broker, and that broker is giving you a leverage of 1 to 1,000, it simply means that this broker is allowing you to trade as if you have $100 that you have deposited times that other figure that I just mentioned. So if you have 1 to 1,000, it means for every dollar that you deposit on that broker account, they're giving you 1,000 more dollars to trade with. So if you've deposited $100, then they loan you 1,000 times 100, which is $100,000. So you will enter the market as a big player, as a big player in the game. So that means that you can actually use that to your advantage by making a lot of money. If you know how to go about it very well, then that will benefit you more. You can use $100 to even make up to $100, another $100, which is not possible with other businesses, okay, unless you're gambling. But here you're trading, you know what you should do, you know when to buy, when to sell, what to do as far as the market is concerned. You can use your $100 to generate another $100. I'm not saying that is what automatically happens, no, but that is what can happen if you know what you're doing. So that is what margin trading is all about. But guess what? It simply means if you don't know what you're doing, and this is where the skill comes in, that you can also wipe out your $100 in an instant. So it's a double-edged sword. So you can use it to your advantage, or if you don't know, you don't have the skill, then this is of a big risk to you. So that's why when you begin trading, there's always a disclaimer that you can lose up to all of your capital, your trading capital. Now, that shouldn't scare you. That should give you, the urge to want to learn, to develop your skill, to be able to make the right decisions on the market. Because once you develop yourself to that level, then margin trading becomes an advantage to you. You'll find that traders, like I mentioned before in our previous segment, that I can turn $100. I can work with $50, at times $5. Why? Because of leverage, and I can build it to some amount if you know how to go about it. Okay, so the skill cannot be overemphasized, and all these modules and lessons are all put together in our blockchain academic hub, where you'll be able to learn how to make the right choices. And we're here to hold your hand. We're here to help you along the way. Trading shouldn't be hustle. You shouldn't hustle around it. Get the skill. We will help you. We have mentorship in place where you'll be able to make the right choices on the market. So that is margin trading. More about it will be, when we go to the charts, you'll be able to see how can you take advantage of it so that you can make the right choices on the market. Margin trading can be a great advantage. Of everything I'll mention today, if you can remember anything, then just remember margin trading, that these can make you real good money. We've seen traders who've started with $10, $100. Of course, the higher the capital, the better. But, with where we are, you can start something from anywhere, any point. The brokers don't tell you must deposit this amount of money. Of course, we have different types of brokers that will tell you our minimum deposit is $100 or $500, whatever the amount of money. Unless you use margin trading, it will take you a lot of time for you to grow your account. Again, the skill should be incorporated into playing around with his margin trading, because that is big. And not just in Forex. We realized that of recent now there's margin trading in crypto as well. So it is a big deal when it comes to trading. The next thing that I would like to mention, because of today's, in the interest of time, is that the three types of analysis. As we begin to look at this skill, what is this skill in itself? When we talk of the skill, what is the skill? What is this skill all about? The skill is about you making the right choices, equipping yourself mentally, okay, and psychologically to be able to make the right choices in the market. You decide that this is a buy position. You decide that this is a sell position. You decide that there's no trading opportunity now. You decide that based on what I know, I need to accept this loss. I need to be able to say, I have to get out of the market. Based on what I see, the trading conditions available to me, I need to exit the market. Now, how do you reach that decision? How do you reach that conclusion where you make that as a decision for you to make money in the market? You need the skill. Now, that skill that will be able to help you make the decisions, it comes in three forms. So I'll break down the three of them, and then we'll be done for today. So the first one is called fundamental analysis. For you to analyze the market, you need to analyze the market, look deeply into the market, and make a decision. Number one, we call it fundamental analysis. Number two, we call it technical analysis. Number three, we call it sentimental analysis. Okay, so fundamental analysis, technical analysis, and sentimental analysis. If you can master these three, the market revolves around all these three. So if you can master them, then you are ahead of the game. So the first one is called fundamental analysis. I'll try to, everything is already broken down for you in the academy, but now we're just giving you a recap for you to see what you'll find on the inside, so that, when you get there, it will be, I'm giving you an anticipation, so that when you get there, you'll be like, I had that fundamental analysis, I had the technical part of it. So what is it in detail? But for now, we're just giving you a recap, or rather a preview of what is coming, an overview of the whole thing. So fundamental analysis, this is where, in simple terms, you're using the macroeconomics, or rather the global news events that end up defining the direction of the market. This is not textbook definition, but that's the best that you can get right now, that you're taking advantage of global news events, economic events for that matter, at times political events, and I'll give illustrations for that, that will influence economic landscape of the dollar, of the euro, of the British pound, of the yen, of the Chinese yen, and so on and so on. And so how that can affect your decision whether to sell the yen or to buy it, whether to sell the dollar against the euro or to buy the dollar against it. So that is what fundamental analysis is all about, where in the market, economic events or news will create an impression in your mind to make a decision that the supply, influenced by the concept of supply and demand. That based on the news events that just occurred, people will be buying the dollar. The dollar will be in demand. So supply and demand, because when you have more in the market than what people need, then the price will go down. If you have less in the market than what people need, everybody is fighting for it, then the price will go up. If the supply is low and the demand is high, then the price will go up. So you need to buy because the price will go up. If the supply is high and the demand is low, then what will happen? The price of that particular currency, the price of that particular commodity will go down. So I'll now give an illustration to, put flesh to what I've just told you. So first and foremost, for example, this happened recently, a few years back, like a year ago, when during the term of President Trump of the US, where he would make news, he would make announcements, whether emotionally or so, and everything about the dollar will go down. The dollar will go down because of a single tweet, because of a single announcement, or because of an event, that he's in fight with China or Russia. And so the demand of the dollar will go down because of that particular announcement. And that used to shake the market mostly. Right now, at this time, nothing much is happening as far as the dollar is concerned, because there are no sudden news events about the dollar in the US. So that should also tell you that at times when you open up an account with a broker, one of the questions they ask you is that, are you politically exposed, or are you linked to any high-ranking political person? Because that political person can decide to make an announcement and the price will go in his favor. So if you're part of that family, then you can take advantage of it, and that is outright rigging. So anyway, that is not the whole thing is about the news events hitting the globe. That something has happened in China, something has happened in the US, something has happened in Russia, something has happened in the UK. Like a few years back again, when there was Brexit issue in the UK, any moment Boris Johnson will go on TV and make announcements, or whether, Brexit and all that, the British pound will be affected. In most cases, it was affected negatively. And so when it's affected negatively, based on what I've told you before, if the dollar is affected, the pound is affected negatively, that means it's weak. So if you have a forex pair of GBP USD, okay, GBP USD, and the pound is weak, that means automatically the USD is going to be stronger than the pound. And if you've ever worked with a seesaw, I think I've got it right, a seesaw where you have one here and another person here, and you're weighing yourself, and this one is weak, this one is heavy, so it will drag it down like that. So this act of being dragged down, just like it happens with the seesaw, then that means automatically you need to sell the GBP USD. Sell. The market is going to go down like that. If the pound is going to be strong and the USD is affected, then the market will do what? Just like a seesaw, the market will go up like that. So you now need to do what? To buy the GBP USD. Why? Because you expect the price to go up. So that is how powerful fundamental analysis is. There are people who focus keenly and solely on fundamental analysis. They don't look at charts, they don't look at anything else. They just stay there waiting for global, big event news and all that, and be able to use that to their advantage, to buy the dollar against the euro, to buy the dollar against the British pound, to buy the dollar against gold, and so on and so on. And it is a big market on its own. So that is what we call fundamental analysis. So it's where you take advantage of global events, global news, macroeconomics, economic news that will determine the direction of the market as far as trading is concerned. So that is called fundamental analysis. So you can take advantage of that. We have different sites that when you become part of our academy, where you'll be able to use that, because all our students have access to all these resources. So you'll be able to take advantage. For those who want to focus more on fundamental analysis, or to combine all the three aspects, actually, if you want to be an all-round trader, then you have to use all the three aspects of trading. There's one, none is superior to the other. Those who say fundamental is better, others will say technical is better, others will say sentiment is better, but then the best is just be an all-round, an informed trader, where you can play around with all these so that you can take advantage of these information. So fundamentals, that's what we call it. In Forex, we call at times, instead of saying fundamental analysis, we call it the fundamentals. So what are the fundamentals talking about? You realize now how we define things here is not what they are commonly defined. So things mean differently here. Like the fundamentals is not the English definition of the word. To us, it's about news events that influence the direction of the market. That is what we call fundamental analysis. Then the second part of this analysis is called technical analysis. Forget about the word technical. It does not mean that now you have to be technical person. No, it simply means you are looking at past data to inform you about the current and help you to make decision about the future. You are looking at past data to inform you about where you are in the present, and so you can be able to predict about the future. What do I mean by that? Price is always printed on the charts. You know, at times when somebody is asking me, I'm like, I'm chatting, you know. When I say I'm chatting, does not mean that I'm chatting on phone, you know, texting. It simply means I'm looking at charts, Forex charts on my phone. So when I say I'm chatting, C-H-A-R-T, I'm chatting, it means I'm looking at the charts to inform me of where the market has been, where it is now, and where it's most likely to be. So I use that past information with the present to be able to predict about the future, and the future could be the next minute, could be the next 15 minutes, the next 1 hour, the next 1 day, and so on and so on. So technical analysis, basically, you're looking at printed charts on the screen, on your phone or on your laptop or on your PC, where you can be able to say, okay, the price was here yesterday. Yesterday, the Euro USD was 1.1351. Okay, right now is 1.13, and it has been here before. It has done this before. This type of move has happened in the past, and based on what happened before, you know, history repeats itself. That's why we use charts to inform us about the future based on what happened in the past. So we look at, you know, a basic chart is where you have the price, okay, and time. Price and time. That the past few weeks or the past few price was here and it's been printing like that. So when you have that, then it will be able to inform you of where most likely the price will be. So the best way is to combine the three, as I already mentioned. Don't say you're a master of one. Okay, if you choose to be a master of one, well and good. But as for me, I will certainly recommend that you need to know about the three so that you can be able to make the best decisions on the market. So technical analysis, you're using the charts, they inform you, when they're printed, you know how to analyze, you know how to read. We have what you call the candlesticks, which we'll get into in our next segment, where you'll be able to see, okay, this candle is speaking to me, it's saying this. You understand that language. You know what is happening. So when you look at the chart, you know what decision to take. There are people who just look at the chart plainly like that with the candlesticks, and there are others who will go into adding what you call technical indicators that are already on the charts, that you don't need to draw anything. They're already there. You position yourself, you position them on the charts, and they will be able to talk back to you. They say, okay, they are confirming to what you've already analyzed, that based on what I see, the market is going to go up, or the market is going to go down, or the market is in consolidation, so I'll wait to strike later when I see a breakout, and so on and so on. All these terminologies, will be able to explain them on our next segment when you talk about a bullish market. Market is going up. A bearish market, market is coming down. A market which is in range, it's just oscillating up and down, not making any big moves at all. It's just up and down. It's also called a sideways market. It's also called consolidation, or the market is in range, where it's just moving up and down within a certain pocket, a certain bracket of price that is not going past that, is not coming below that. So that is called a ranging market. There are people who trade that, but also at that point, that is where most traders lose their money, because they can say, okay, the market wants to move up, they pick a buy, and the market goes back down on them, they lose the trade. So that aspect, we will be able to define all of them. We'll be able to look at market structure, where you determine the direction of the market. When you look at the charts, they speak back to you and they tell you, okay, the market will be in this move. So trading can be very, very interesting, especially if it's an adventure where you look at things differently. It puts you in a class, a different type of class where you're able to interpret things before they happen. You're able to tell where the price will be. Like, I'll set a trade today, the next few minutes, then it's, taken out in profits. So it's a big adventure as far as the financial markets are concerned. So that's technical analysis. And then lastly, but not least, is what we call the sentimental analysis. Number 3, the market has feelings of its own. Look at the market as an individual, as a person who has emotions, that they have emotions to buy and emotions to sell. Now, the sentiment talks about the number of people that are in the market going a certain direction. That if we have more buyers in the market, if we have more buyers than sellers, then the sentiment speaks of that the volume will go up. That the volume will go up, the price will go up. More buyers in the market, it means buyers are going to push the market higher. So the sentiment of the market, in that case, we say, what is the sentiment of the market? You hear somebody say, I feel that the sentiment of the market at this point is buy. Okay, you can buy. The market is buying. The market is bullish. So when you look at that as the sentiment of the market as bullish, then you can use that to your advantage. It's not so much technical, it's not so much fundamental. Sometimes it's a combination of both. But when you see more buyers in the market than sellers, then the sentiment is buying, and you do not want to go against the big players of the market. If the big players are buying, then look for buying opportunities. You can use the technicals to buy, or you can use the fundamentals. Just find a reason, a valid reason as far as analysis is concerned, for you to be in the direction of the sentiment. So how strong is the dollar today? How strong is the euro today? Are you able to know that? Again, inside the academy, Blockchain Academic Hub, you'll be able to know when the currency is strong, which currency is strong. We have indicators like that will be able to show you which one is strong. Right now, we have indicators of the market already, but we have our own inbuilt indicators that will be able to play to you the sentiment of the market. So why did I say that you need the 3? When you look at the fundamentals, that the news about the dollar is, the dollar is weak. Okay, something happened, unfortunately, and in America, the dollar is weakening. And then you go to the technicals, the charts are speaking the same language, that you should be able to take advantage of this weak dollar in the market. And then you go to the sentiment, you find more people are not interested in the dollar. The supply and demand motion. Okay, very few people are interested in the dollar, so the dollar is actually weak. So when you combine the 3, you have a more appropriate way of trading. The thin line is analysis, where you can use fundamentals, technicals, and sentiment for you to make a decision that is, the market will be in favor of you. You can't do that with gambling. I've never seen the top richest, one of the richest people is a gambler. No. People make money through trading, and that's why the market is big. And us inviting you to come and trade, you should take that invitation, but first and foremost, you should be part of the Blockchain Academic Hub, because that's where you combine the skill and opportunity. What is the opportunity? The market is there for you 24/7. One of it is 24/5. What you need? The skill. So welcome to Blockchain Academic Hub, where skill meets opportunity. You don't need making money online should not be a hassle to you anymore. So we have modules in place that will be able to help you, guide you, and lead you in the right direction, and we hold your hand. This is what we do at Blockchain Academic Hub. So ladies and gentlemen, welcome to Blockchain Academic Hub, where opportunity skill meets opportunity. Thank you so much, and have a wonderful trading time. Thank you.